Willem, good morning or good afternoon in Europe.
My mic was out. Hi there. I just said the weekend has already started here.
Yeah, the weekend has started in Europe. It's 5 p.m. there, right?
Yeah. So
All right.
just
Well,
poured myself a first drink.
oh, really? Okay. All right, I'm still on
Yeah.
my coffee. But yeah, it's very good to speak to you this morning. There's no shortage of things to talk about as always. I think definitely we want to talk about a couple of junior mining, you know, new, discoveries and companies. Also talk about precious metals, de-dollarization. And then I have a couple of questions that I've prepared for you. So starting with gold, one of the big trends of the last couple of years has been central bank accumulation of gold. And there's some data that's been spread around lately about China stockpiling a lot of gold, something like $15 billion worth in the last year. I'm not sure how accurate that data is, but it's a big number. And gold is not a huge market, so $15 billion definitely makes a difference. What do you make of China diversifying its currency reserves, and how big of a role do you think gold plays in de-dollarization for China?
Sorry. Well, we've had this debate over the last 12 to 24 months, maybe even 36 months, from the Bitcoin community telling us that Bitcoin would be the new currency of the future, and Um, central banks will soon understand that it's all about Bitcoin. Well, um, if we look at what central bankers do and not what they say, they're all buying gold. And I'm not surprised that China is buying gold. I'm not surprised that Russia is buying gold. I'm surprised Hungary is increasing its official gold holdings tenfold. The Czech National Bank is increasing its gold holdings tenfold. These are European countries. Ireland started to buy gold again. So I'm more surprised by these actions than the Chinese. And they're not buying Bitcoin. I do like Bitcoin myself, but it tells you gold is still the ultimate hard asset, the ultimate form of money. And gold is having its renaissance, one could say. And gold is actually coming back into the system.
Hmm. Yeah,
Who would have thought?
gold is having a bit of a comeback. In fact, I think a lot of people are surprised by gold's strength in 2023. The Fed has tightened a lot. A lot of central banks around the globe have tightened a great deal. The dollar has been very stubbornly strong. Um, and here we are, even gold has pulled back, this week. We're down 50, $60 an ounce, but still, I mean, 1940, 1950 is a pretty high gold price, based upon where we've been the last 20 years, right? So it feels like gold is pricing in something still to come, that there's this accumulation going on because something that's maybe right around the corner. Yesterday we had a treasury auction, 30-year treasuries, in the US. It was a very poor auction by all accounts, with the dealers having to take home about 6 billion of the
Mm.
$24 billion, auction. We saw yields spike. It's starting to feel like the US Treasury is going to have some more challenges placing all this debt that has to be sold over the coming months, over the next year, right? And nobody wants to really take that 30-year, 20-year paper. It's kind of like, I mean, I don't want to say it was no bid. I mean, obviously there were bids, but the bids are getting weaker. What do you make of, yesterday's 30-year auction, and, what does that mean for gold?
Well, this is not a big surprise. Remember when we had the repo crisis late 2019, when we saw a similar kind of situation where the US needed to fill its fiscal holes by selling a lot of treasuries. There wasn't enough liquidity in the market, we were told. And then they said they had to support the market temporarily. And then they said they had to do it for a few more weeks. And then they had to do it over the year end. And then COVID started and that whole story faded away. But we saw QE was coming back late 2019 after a period of tapering as well. I think we'll witness the same now. Soon QT will become QE again. I think we've seen a pause in the interest rates rises in most of the Western countries. And we might see, rate cuts in 2024 and the restart of QE, because we all know the US will need to, roll over trillions and trillions of Treasury debt, and the fiscal hole on the budget is well over 1 trillion and could reach almost 2 trillion. So I'm not that surprised.
Yeah, I mean, when you think about it, right now gold is trading about 1950, and the market is not thinking there will be a rate cut until mid 2024. It makes you wonder, what do you think the market would do if the Fed announced, okay, we're stopping the quantitative tightening, and then they hint at the first rate cut? It just makes me wonder what we would see, in the market. I mean, stocks, the dollar.
We already seen it. We already seen it. The dollar has been topping out. The interest rates are declining. The interest rates in the US came down from 5 to 4.6%. Gold has been jumping $150 since, what was it, early October. Bitcoin has started to run. So you see the market is already taking this into account. So when the Fed will make it official, the markets will have front run it
Hmm.
quite a bit already.
And so then, you run the CD fund, and I think most of your fund is
It's the commodity discovery
commodity.
fund. We insiders always talk about CD funds, but for people who are not in the insider group, it's the commodity discovery fund.
Right. And the biggest portion of your fund is in, mining stocks, right?
Almost
All of
all.
it. Okay.
Yeah, we have a permit, we have a license. We can only invest in listed equity, so we can't buy the physical
Hmm.
metal. So it's all mining equities.
So yeah, so that brings up the next question, because we are seeing what I think is the biggest gap between the value of public mining companies. So let's just take gold, for example, gold mining companies, relative to the price of gold itself. I mean, the GDX, which everybody, takes a, look at that chart as the main proxy for the whole sector. We're at 27, 23 a share, near the lows for the year, down 5 days in a row. And yeah, I mean, gold is down this week, but the performance of these shares is really poor. What do you make of that? And what do you think the reason is for the poor performance in the gold mining shares?
I think we're reaching the end of a very long bear market in everything mining related. And this bear market started around 2010, 2011, and markets have been declining, and especially valuation has been coming down ever since. And I agree with your analysis that we've reached rock bottom valuation. Actually, the lowest valuation for the mining space compared to general equities was late 2020. And then we've seen a bit of a recovery in 2020, and now we've seen this correction and over the last 2 years. So I think we're reaching the end of the bottoming out phase. We had a major bottom for commodities early 2016. That was the low for the commodity space, with gold reaching almost $1,000. And we had a retest of this bottom during the COVID crash, March 2020. And now we have a second retest, which gives just a higher low, a second higher low. And I think this really marks the end of this long bear market. And if we look ahead, we all know that there will be production deficits in many metals, especially after 25. So the markets might be at the start of a very strong and long new bull market, but people are not convinced yet. And I think this is actually the best buying opportunity I think ever seen in the commodity markets, because it's so clear what's ahead of us with the green revolution and the shortages coming. I just gave a presentation in Spain 2 days ago, and the title of my presentation was "The Perfect Storm for Commodities," because it's all coming together. And I'm more relaxed than ever as a fund manager, although many of our investors and also of our staff are very frustrated about this market.
Yeah, I think those sentiments are shared widely. I've spoken to a couple of CEOs in the junior mining sector this week, and I think frustration is the word for it. Um, and even I've seen some CEOs post that it's very frustrating that they've put out, really good results. They continue to advance their projects, and the market gives them a minus 30% share price, right? And it's just, simply put, cost of capital has gone up, money is tighter. And if you look at the earnings of a lot of companies, like we've had the miners especially have put out their earnings results the last couple of weeks. Costs keep going up, right? Like IM Gold. I mean, obviously it was a bad quarter, and they had some extraordinary expenses during the quarter. But 1975 all-in cost per ounce of gold production. That's appallingly high, right? I mean, I think Newmont's up to about 1,400. A couple of other companies are up to 1,500, but 1975 is just an absurdly high price, high cost to mine gold. So, if we had thought back a few years ago, we said, okay, gold's going to be 1950. You'd say, well, the GDX will be 50, but here we are today. It's 27, right? And so, what do you think is needed to turn this sector around, to sort of turn the tide for mining shares?
Well, before markets turn up again, you always have these very depressed levels. So this is where sentiment like this is when you reach a bottom. And when I look at the graphs, I looked at hundreds of graphs of the last 24 hours, and they all, most of them show the same pattern. You have this acceleration to the downside, and this might continue for the worst actors until Christmas. So December 24th, 25th, because then you have the end of the tax loss selling season. And I expect a very, very, very strong recovery in the last week of December and then January, February. Because on average, our markets, especially Canadian venture stocks, on average, they jump 20 to 40% after tax loss selling. And this year has been so brutal, and the tax loss selling will be, or is even worse now. So I think the recovery will be very strong. And we don't focus that much on the producers. We don't have that many gold producers in our portfolio because I don't like that business model. I don't like companies taking gold from the ground and producing them and selling them with a very small profit. I prefer to have companies who keep the ounces, who find the ounces, who have more ounces at the end of the year than the beginning of the year. Most producers have less ounces in the ground at the end of the year. So we focus more on the exploration side. We've seen some big winners. Look at what happened with next gen energy. There's a bull market always somewhere. There's a bull market in uranium now, and Next Gen Energy is doing very well. Chemical is doing very well. So we shouldn't focus too much on gold.
Yeah, that's a good point. You know, uranium has had a great year. And actually, if there's one sector we can point to that we can say emphatically is in a bull market, has been in one, it would be uranium. Chemical above $40 a share, has had a fantastic year. But you know, also, you know, if you so you don't invest in senior companies generally, but you invest in the junior companies. But the junior companies' valuations are affected by the valuations of the senior companies,
Yeah,
right?
yeah, right.
um, so let's talk about some individual stories. So I think the last time we talked about Storm Copper, which is the copper project in the Arctic. BAY is the symbol of the company that has a 20% interest on the project. And then there's you know, American West is the operator. That one has been a bit of a roller coaster. Um, I think American West shares went from like 5 cents to 40 cents, and now back down to like 13 cents. Bay had a similar, like, 4 cents to 30 cents, and now back down to 6 cents. You've been pretty outspoken that your fund is a shareholder in both companies. Is that still
Yeah,
true?
we still are. We still like them.
So, what do you make of this round trip in the share prices and the huge volatility? And what would you say the market has wrong that has you buying these two stocks?
Well, you know, the market sees this as a very binary situation. And what I mean with binary situation, you have um, for investors want to see that there's enough copper there, so a major copper mine will be almost guaranteed. And when they think there's enough copper there to be found, you know, um, the prices run, and that's what we've seen early this summer. What was it, July, August? And then when investors learn that not all holes drilled point to a massive copper find, they sell off these shares, and then um, they act like there will never be any production of copper in the Storm project. Sorry, but I think investors are wrong. Um, if you've done your homework and if you research the Storm project well, and we've been following this project for a long time because we were quite large investors in Bay 5 years ago, when even BHP got attracted to this situation and teamed up with Aston Bay. But if we just look at the facts, it is well known that there's a copper trend which runs for tens of miles. It's well known that you have outcropping boulders of chalcocite which contain 78% of pure copper. I have one of those boulders actually in my office because the CEO of Aston Bay once gave me one. And it was always a question if the copper, the outcropping copper, was related to the geophysical targets underneath. And what American West and Aston Bay have showed in the last 12 months, they've clearly proven that the geophysical targets at depth are mineralized and contain high-grade copper. So this explains the high-grade boulders, which can be found there over tens of miles. So this is a huge system, and American West is very aggressive. It's well run, it's well capitalized, and they'll make sure that they'll prove to the market that they can produce copper there on a profit. And they will start with the shallower deposits. And I think they will show the market that they will be in production in 3 to 4 years. And then they'll use that money to explore the copper at depth. And that's where the big prize is.
Yeah. So the big picture is that this is a very big target. I mean, this could be something very, very large. Just
It's
because
not
this.
it's not a target. Also, we had this discussion last time. It's not a target. Of course, it's a target, but it's a system. It has
Mhm.
been proven it's a copper system. There's no debate about that.
Right,
It's a huge copper system.
right. Stratiform copper system and also near surface copper. There absolutely. There's no doubt. There's a lot of copper there, but to go
And
from
what
yeah.
what do we need in the future?
Mhm.
Copper. So companies will fight for this in a few years' time, and already um, we've had discussions with management of both companies. Already, there's there are some larger companies willing to sign offtake deals and finance them.
Mhm. Yeah, it's a very intriguing project, and that's obviously why both company share prices had such a large run during the summer. But then there was some, disappointment when they put out the assays for some of the holes, some of the deeper holes, especially hole 2302. So there was basically when you read the first news in early August, it looked like there was 37 meters dominantly chalcocite copper sulfides at depth in this hole 2302, and there was probably a 6 or 7 meter portion of that was much higher grade than the rest. Like if you just read the visuals that the company wrote about in the first news in early August, and then the assays came and they were clearly short of market's very high expectations. It turned out to be 24 meters of 0.2% copper, and then a subinterval of 6.8 meters, 0.53%, and that was disappointing because that's just at 350 meters depth, 0.2% is just not going to be. It's not high enough grade. So, what does the company need to do to prove this it is economic in the future, and what makes you so confident of that?
I advise them to start drilling the parts of the system where the higher grade can be found, because we shouldn't forget that these 4 holes drilled this summer, were designed to test the boundaries of the system and not the heart of the system. So it's not strange. It's actually to be expected that at the edges of the system you don't find the highest grade. So it was a wonderful success because it showed you have these CDEX horizontal structures, and actually it was proven they are running for for miles. They put in two holes, and it showed the same structure at the same depth. And when you have all this chalcocite and you have all these boulders containing 80% copper, this copper is coming from underneath. So the market is wrong to think there's not enough copper to be found there. But that brings a great opportunity for investors.
Yeah, it does. It does. And also, we know it's expensive to drill up there. And that's always the challenge of the junior mining sector is time
Mhm.
and money. So they have to wait for the next season and they have to raise more capital to do another drill program, right? And so that's why the market sold the stocks off.
Yeah, that's right. But when Aston Bay was the operator, the drilling season was 6 weeks, I think.
Mhm.
Now American West is the operator. The drilling season is 6 or 7 months.
Really?
They,
Six
yeah,
months?
yeah. If you look at the exploration plans for the next year, um, they can um, they they were able to increase the window to do exploration there. They could even be drilling in winter if it's really needed.
Hmm. Were you disappointed by hole two? Because like when I read that on August 2nd, I was thinking they probably have like 6 or 7 meters of 2 or 3% copper there in that hole. And maybe the wider interval might be like 30 meters of zero point 0.8 or like 1%. And the grade just didn't seem to carry dominantly chalcocite. I mean, it was like almost 30% chalcocite in some, or sorry, 30% sulfides in some areas of that hole. And basically, the high grade was 1.8 meters of 1.3%. So it's just way too narrow.
But this is to be expected at the boundaries of a system.
Mhm,
Like I said before, they weren't drilling the heart of the system. They were drilling the boundaries of the system. And the great success of this drilling campaign that they have proven that these geophysical targets at depth are mineralized. That's the most important fact. Because if these geophysical targets are mineralized,
mhm.
you can presume all the other geophysical targets for tens of K along strike are mineralized as well. And do the math, how much copper is to be found there. And we always judge these results based on the copper price we have now. But we all know there will be a huge production deficit of copper in 5 to 10 years. We all know because the CEO of Idaho, Robert Friedland, and the CEO of Glencore, they both have said that the copper price needs to be and will be much higher in the future. So these projects will be developed because we need the copper.
Yeah, there was a graphic that's going around. I don't have it in front of me, but it was something like the current consumption of copper globally is like 26 million tons, if I'm not, mistaken. And by 2050, we're going to need more than double that. So more than
I showed
50.
that one in Spain 2 days ago. I showed that
Yeah.
that it's the two cubes of copper.
Yeah,
But
it's incredible. And so basically, I think that amounts to like 20 mega copper mines that
oh
will
yeah,
need to be like 20 mega ones, like not
we
small ones.
we need to find a new Escondida every 12 months,
Hmm.
and
Right.
Escondida is the largest copper mine, and this can't be done. So you're sure production deficits will deliver very high copper prices. You can buy the whole of the copper project now, the two companies,
Hmm.
for less than 100 million. You
Yeah.
know, stop wasting time discussing whether this will be a mine one day.
Okay.
Buy the shares.
All right. Then, Hercules Silver. So speaking of copper, so big. So we have Bay on the venture.
Yeah.
Now we have Big on the
Uh,
venture. Both start with B. And Hercules originally just looking for silver in Idaho and maybe, looking for 100 million ounces of silver near surface. Not bad, you know. Something that could be worth something for sure. But
mhm.
this year they made a new discovery. So they drilled deeper. This big chargeability target at depth, blind discovery, and they drill almost, what was it, 180 meters of like 0.84% copper. So new porphyry copper, discovery in Idaho. And then this week we had big news Monday morning. Barrick Gold, second largest gold producer in the world, um, comes on board for 12.33% stake in the company. And what's interesting, there's a lot of interesting things, and I don't want to say it all at once, but what I found really interesting is Barrick was buying the shares on the open market in late October. Um, are you a shareholder of Big?
We own 2%, almost 2%.
And what did you make of the Barrick news and this new discovery?
We weren't surprised, but we were happy to see a major coming in after just days or weeks after the discovery. I've been in this industry for 20 years now. I can't remember seeing a major coming in within weeks after just one hole. Um, and it tells you that this is a very remarkable, potentially world-class discovery. And this clearly shows that Barrick is sure that we found the first real um, copper porphyry in Idaho. For the whole history of Idaho, no porphyry was ever found there. So this opens up a whole new district. And we've been researching this story quite a bit. And what we've learned that this looks to be like a porphyry camp because there are some previous results from drill programs nearby, which show there's a porphyry right, next to Hercules Silver. And if you look at the size of the geophysical target, because the CEO of Hercules Silver has explained, and you can also see it in his last presentation, which went online yesterday, that they have a huge target there, and this is confirmed by geophysics. And I think this has attracted majors like Barrick, and this is a huge confirmation of this very potentially very important discovery, world-class discovery.
Did the investment by Barrick, surprise you at all because they're not really thought of as a copper miner?
Well, we all know that, like all silver companies have turned into silver gold companies, most gold companies, gold producers are turning into gold copper companies because copper will be such a great market in the future. So we knew Barrick was willing to invest in projects which also had a large copper component. Um, so I wasn't surprised that Barrick um, got attracted by these results, but I was expecting other majors to show up more maybe sooner. This is a project which Ivanhoe Energy by Robert Friedland will like a lot. Rio will be attracted to a project like this, but the Barry guys were very aggressive, and this tells you something, because before a major pulls the trigger, they need to be very sure about a few things. And never forget, we as retail investors or as fund investors are always a step behind guys like Barrick, who went to site immediately, saw the core, and you can assume that the geologists from Barrick have quite a good understanding what kind of system this is. And never forget, you have Bingham Canyon, which is in another state, but it's not that far away. And that's a monster which has been producing copper for over 100 years. And if you look at the size of this geophysical target and the supergene zone and the silver blanket and the porphyry, other porphyries they find next door, this could be a Bingham Canyon like uh, well deposit. And if you do the math, then you understand why Barrick came in so early. And this reminds me of the Voisey Bay discovery in 96 or 94, 95, the nickel discovery. And actually, I'm rereading the big score as we speak about this discovery. And then we saw one of the majors coming in even before they were able to check out the core, and they bought a 10% stake for 100 million. So this happens when you have a real powerful discovery.
Yeah, I mean,
But it only happens with the super world class discoveries. Otherwise, majors don't jump in that early. Another situation which comes to mind is Arequipa. This gold discovery by Arequipa, also in the
mhm.
early 90s. That was bought out by Barrick after 7 drill holes. It was bought out for, what was it, almost 800 million?
Yeah, that's one I don't know very well. But yeah, you mentioned a lot of really important things there, and I guess that's why you took a 2% stake. It has it
Before
has
Barrick took it, eh? Before Barrick took it.
yeah, yeah, exactly. And the thing about Barrick, that's well, there's several things, but the CEO is a shrewd guy, and he doesn't usually like to invest in juniors. And we've seen many times in many different presentations, he says, we would rather grow, you know, internally. We have a lot of good exploration projects already inside the company, and we're not going to overpay for any asset. Now, granted, this is $23 million for Barrick. It's not a huge amount of money, but it's about more than just the
Yeah,
23 million. They're putting their name on this and their
they,
reputation on the line. And also, if you read the news from Monday morning, Barrick is going to lend three of their porphyry experts to Hercules for the next drill program, and they're also going to assist Hercules in generating the 3D model for the deposit. And that's a big help, because a company the size of Barrick has some very good technical expertise and some of the best minds in the business, and so that really struck me as being a very important part of this deal. It's not just about the money.
they got so much criticism, Barrick, especially the CEO, by not doing M&A, by not buying other great projects. And the fact that they pulled the trigger so fast on this one, that tells you a lot.
So we we've talked about the positives. We've talked about the things that we like. Let me ask you a harder question. So, in a project like this, Hercules, what could go wrong? What would make you maybe sell your shares?
Well, we know from statements by the CEO that there's a mineralized geophysical target which runs for miles. We know it's mineralized over 1,000 meters. We know there's a supergene zone. We know there's 150 million ounces of silver. We know it's in a perfect place to build a mine. We know a major has taken a 14% stake. What could go wrong? That's a great question. Of course, drilling needs to show that the average copper grade will be at least 0.3%, because you need 0.3% to mine it profitable. I think that's the only risk, that turns out to be on average 0.1 or 0.2.
And nothing about permitting or anything like that?
No, because there's nothing. Actually, well, there's power near, there's a road near, but the nearest town is 20 miles away. This is a mining friendly region. And I think everybody in the US will be very happy when a new mine will be found, because there will be lots of good paying jobs there. And never forget, with the current geopolitical tension between the West and the East, imagine the US is doing a huge copper find with gold and silver added, and maybe some other metals.
Mm-hmm.
This is highly beneficial. And this is not like the Pebble deposit, which was a huge discovery in Alaska, but can't be built for environmental reasons. There are no environmental problems here in this part of the world.
Never say never. It's mining. Willem,
Sure.
never say
And
never.
and and that's why it's only 2% of our portfolio.
Yeah, yeah. No, I
We
agree.
don't we don't risk the farm. Huh?
Right. I really like this one too. I was an early buyer. I bought on the morning of the October 10th news. I like it too, but I also know
And
that.
you know what's interesting? We just took a 10% stake in a private company which owns the land nearby, which has a porphyry showing, and
Mhm.
which has a valuation of 4 million.
Very interesting. So yeah, let me let's open up the floor to a question or two. If you have a question, please hit your speaker button, and I'll call on a couple people. I do want to ask you a couple more questions before we wrap up. You I see you post on Twitter or X charts from time to time. I think you like wave, analysis, cycle
Yeah.
analysis.
Okay.
How does technical analysis inform some of your investing process? Like, how do you use it?
Well, technical analysis is a great way to help you to find good uh, entry and exit points. Are you still there?
Yeah, yeah, and
Okay.
then
Oh, sorry. I thought I lost you.
no.
So it's a great way to find entry and exit points. And I'm a fan of A.V. Gilbert, who I've considered the best Elliott wave analyst out there. He was the guy who called for the top for gold in 2011, called for top for gold in bottom for of gold early 2016, and I like his larger, longer time vision, and he is on the record by saying we bottomed out in the commodity space early 2016. We had a retest in 2020. Like I said, we had another test now, and now we will witness the start of a bull market which will run to 2050. That's the next 30 years. I just turned 61, you know. In 30 years, I'm 91. I'm still younger than Warren Buffett. And this will be a hell of a ride. And he calls this from a technical point of view, but from a fundamental point of view, we know we get all these shortages in commodities. We know the East and the West will fight over copper and nickel and lithium. We know we have ongoing debasement of currency. We know we'll need a monetary reset. We know we might get a revaluation of gold. So everybody's so depressed in our industry, but the next 10 to 20 years will be amazing. I've never been more positive, actually.
That's very interesting because some people out there have never been more negative. So,
No, but you know, we're blessed because we had net inflow every year since 2008. We had net inflow every month, besides 1 month this year.
mhm,
So um, we succeeded quite well by um, showing this to investors, to present investors and new investors. And like I said, I did a presentation in Spain 2 days ago, 80 people in the room. 20 people signed up to be willing to talk to us about future investments. So people get the story.
mhm. Um, Final two questions. I guess people are too shy. It is a little scary to get up in front of 200 people live. But so final two questions. What has been your worst trade of 2023? And what has been your best trade of 2023?
Best trade has been Azure Minerals in Australia. We initially bought them for a nickel discovery in the Pilbara region, which was quite interesting. And then they found lithium. And now it's maybe the top one or top two lithium discovery worldwide. And they already had a buyout offer by SQM, a major producing lithium. But the Australians want to keep it to themselves. So there's a few billionaires who are buying into this company. So that has been a 14 bagger for us. Biggest loss actually is American West. um, and that's why I'm still laughing, because I'm very happy with the fact that we own what I think 7% of American West. Owning 7% of an amazing new copper district in the Canadian Arctics will prove to be very beneficial for us in the longer term, but in the shorter term, we're down a lot.
That brings one more question to my mind. As a long-term investor in the junior mining sector, we're always fighting dilution. I mean, the companies need to raise money. It's just the nature of the business. But from an investor standpoint, it dilutes our stake unless we add more money to the company every.
Not always, not always. You can have offtake agreements, you can have NSRs
Mhm.
where there's very little dilution. SolGold once sold an NSR of 1% in return for 100 million. SolGold is valued now at 300 million. Actually, we've been adding to our SolGold position today. That's one of the largest copper gold discoveries which are undeveloped. Actually, is the largest privately owned by a junior owned a copper gold discovery worldwide, the largest one, and it's valued at 300 million. This is a
Mhm.
steal. And they did a financing 100 million for a 1% NSR. So no, hardly no dilution.
So, but that's a rare case. There's a lot of instances where there's a lot of dilution, and especially in Australia, they love to have these massive share structures. How do you counter that as a shareholder when these companies are so willing to get billion share capital structures?
Well, we don't like it, billions and billions of shares, but we don't mind. It's all about market cap. It's not about the number of shares outstanding, it's about the market cap. And we like it when the management has a large stake in the company because then they are anti-dilution, just like ourselves. And I'm hoping and expecting American West will do a smart deal, which prevents them to go to the retail market. They still have 7 million in the bank. They need a total of 10 million for the full year exploration program. So just a small deal with an off-taker will be enough. Well, I'm hoping they'll make the right choice.
I have a feeling like this will probably be the last time we speak in 2023, unless we decide to do a space at the very end of the year. Let me put you on the spot with one final question. What is one unexpected event that you see as being more likely than not in 2024? Like, what's one event that you're seeing that maybe a lot of other people are not expecting?
I will give you two. One very negative for the world as a whole and our industry. There's a military conflict between the US and China. I don't expect it. It could happen. And one very positive and more in our space, that somebody will pull the gold card and will propose to start a gold revaluation. Could be central bankers, could be the BRICS countries, could even be the US. The US could even solve quite a number of problems by saying the dollar will be gold backed or gold linked again. I don't expect it, but could happen. Would surprise everybody. And if people want to understand more about that scenario, I wrote about it extensively in the Big Reset in 2013. People can still download the book for free at our website. So.
All right. Willem, fantastic conversation. I appreciate you joining me this morning. We have one question. Let's see. Oh. Malik, do you have a question for Willem? I don't know. All right, Willem. I think we'll wrap it up there. Thank you so much.
Okay.
Have a wonderful weekend.
Hello?
Oh, there he is.
Hello?
Yeah, we hear you.
Hi, Willem. I just want to comment on your fund's performance. So it seems you launched your fund in 2008 at 100 NAV. Currently, NAV is 62. No shareholder value returned, even though 81 M&A takeouts. Can you please explain why performance so low?
Yeah, if you look at our main benchmark, which is the Toronto Stock Exchange Venture Index, the CDNX, it's down 80% since our inception. So
I believe
that explains a lot.
This is not fair comparison, as you are active fund. You should outperform.
Yeah, that's why we outperformed.
But down 40% since inception is not.
Yeah, the market was down 80%. So if you're down 40% when the market is down 80%, you outperformed the market. And you shouldn't forget, we had 4 years in which we had gross returns between 70 and 90%. So we started our fund at 100, and within a few years we were 250. So some investors, trade funds. You don't have to stay into a fund for 15 years. You can trade it. You can buy low and sell high. So that's what the industry is all about. And we are investors, and we invest in a certain market. And when the market goes down 80%, we go down 40%. That's not something I'm proud of. That's not something I like. But I'm glad we didn't go down 80%. A lot of our peers, they collapsed, they folded, they stopped running their business. We started with 3 million in 2008. We have 100 million assets under management now. We have 2,000 investors, and the valuations are rock bottom, and we have a great future. So that's
One
the
more
answer.
question from Karat, K-A-R-A-T.
Yeah, hi you guys. So a question regarding the recent discovery over at Hercules. So I've been a shareholder of theirs, ever since their stock was like 20 cents, and so now I'm obviously sitting at a 500% return, and I just like to kind of ascertain, like, get your guys' view of like if the next couple of holes come out very positive, and the copper mineralization is really is really good, whatever that might be. Let's say it's over 2% or whatever. Like, do you guys, like, what do you guys see happening to the market cap
Yeah,
essentially? Thanks.
yeah, that's a question I ask myself every day. And if you envision that Barrick entered this play, Barrick wouldn't have started this investment when they wouldn't have agreed internally that this is potentially a world-class copper, gold, silver, porphyry. And that means when Barrick is right, so it's not about us being right, but when Barrick is right about their initial analysis, this company will be worth 3, 4, 5 billion within 2 to 3 years. And this is comparable to the Voisey Bay discovery in 94, 95, 96. And Voisey Bay, which was a monster, of course, is a different system, so you can't compare it from a technical point of view, but you can compare it from a valuation point of view. And there you had a situation that a company which was worth 20 million before the discovery was sold within 3 years for $4.3 billion. And that was 96 money. In current money, that would be, let's say, 15 to 20 billion. I'm not expecting Hercules to prove a system as valuable as Voisey Bay, but when Barrick is right, this will get at least a valuation north of 2 billion before all is said and done. But we could end up in a situation that Barrick, just like Arequipa in the 90s, Barrick will try to buy out the company before a valuation of 2 billion can be reached. But I expect when the next few holes will hit, and of course not all holes will hit, but if they can prove is mineralized up to 1K, and the grade is at least 1.5% copper on average, I think this company will run to a valuation of $500 million or even $1 billion very soon. And this also explains why the valuation has jumped from sub 50 million to, let's say, 200 million in a few weeks.
All right, Willem, that's a great place to end it. Thanks again for your time, and have a great weekend. Thanks for tuning in, everybody.
Yeah, and just one caveat. These are all assumptions. So don't sell your house and buy all these shares, because things can turn out to prove less positive. But if we look at the actions of Barrick, this is the scenario I can envision.
Yeah, this is definitely not investment advice. Please do your own due diligence and speak to a licensed investment advisor. Thanks, guys. Cheers.
Thanks.